Ladies and gentlemen of the crypto space, we're live on a Friday, January 26th at 11:44 a.m. The dollar, baby, the dollar. Dollar down, assets go up. It's just the correlation, or rather the inverse correlation. So we're going to look at the dollar. We're going to see basically, I'm not going to go through the whole history lesson from macro. I really want to talk about crypto today because the markets look good. As much as us coming off of a couple of days of depreciation, that doesn't really mean anything with regard to directionality, with regard to the overall macro crypto conditions, not macro financial, the world, but the entire crypto space as a whole. Holistically, looks very healthy. Just a lot of volatility, and that's understandable. 5, 10, 15, 20% dips are not out of the ordinary. This is a very different market than anything anyone has ever experienced years past. It's a hyper volatile market where it's novice actors, not investors, capital gains traders, PVP players, people that don't have staying power, as the imagery suggests, people that aren't able to navigate rough weather, people that get scared. But overall, let's take a peek. Let's do it. Let me get the other screen up. So we're looking for basically the dollar to hold weekly and monthly TWAPs as resistance. TWAP is basically a way to peer down the middle, the average price. It's something that I've grown to appreciate because there's a lot of noise. There's noise even amongst the average prices, the moving averages. But the TWAP is kind of like right down the pipe. So I like that very broad inspection of an asset's price action. And we see it's holding the monthly TWAP thus far, and there's 5 days left. So if we see what we've seen last month, this will be the second month of the monthly time weighted average price holding as resistance, and that would be meaningful. Now, one candle is meaningful, and one candle follow up is meaningful. I'd love to see it close below the open of last month, which is about 103,362, and we're hovering right around there. There's 5 days left, and all of this information between now and 5 days from now gives us an expression of how we're following up from last month's rejection of the time-weighted average price. Confluence is built over time. More data, more confluence, and February would be quite meaningful if we close at a lower low. If we close at a lower price than the open of last month, that is meaningful. And all these data points together suggest overall directionality. We're also holding as resistance the 50 SMA on the weekly, which is below the time weighted average price. So this is quite interesting. This is constructive for asset prices. Separate entire conversation, the significance of dollar value in the global setting of what that means for the United States, purchasing power of other fiat currencies. That's not the most important inspection given our primary interests are not even asset prices broadly in the United States, asset prices in crypto markets, which is not a United States market. So this is pretty much where I'll leave macro land. Bitcoin looks great. Bitcoin is still at a significant premium. You are significantly diverged from the time weighted average price on the monthly. 28 and 29,000 is that value. And notice we had basically a time weighted average price mean regression on the weekly. So a bull market, take a peek. Zoom out. So a monthly gives you a decent expression. In a bull market, you don't even touch the time weighted average price. You just stay diverged for months on end. And this is a very constructive presentation. We are significantly diverged. Things will slow down. Let the time weighted average price catch up in February. Heading into March, we see significant appreciation if the dollar further comes down. I like looking at that. Notice is premium, 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 mean regression. The second premium was an aberration in many regards, but mean regression breakdown. And then we have our tightening cycle, our very awkward tightening cycle that started at the end of 2021. But breakout, retest, higher high. So right here in this region is the trifecta of bullish confluence. And this basically tells us where we're heading with the market. Oh, where did my circle go? Where did my circle go? Look at that region right there. This is a breakout, a retest, and a higher high. So you can literally have a retest to this level. So new level to add to this chart. Horizontal line right about there. Boop. Give or take. This level is not entirely relevant, not even from cycles past, maybe non-logarithmic, but it's irrelevant. So this is where we are. So if we see a retest down to 31,000, that'd be interesting, constructive, not necessarily a bad thing. I'll flip back to the whole point I can make in that regard. Rough weather, volatility, lots of visitors, travelers, transitory vagrants of sorts, people that don't invest and they're afraid. So there's a lot of charts that look very constructive. In fact, a lot more constructive than Bitcoin. Bitcoin isn't the only narrative in town. Dollar's not going anywhere. The concept of credit isn't going anywhere, especially with regard to whatever anyone wants to say about a future Bitcoin economy. You need Bitcoin liabilities. Nobody's going to want to spend their Bitcoin. They're going to want to use it as collateral. So these types of collateral systems are clearly expressed in plethora. Frax happens to be my favorite way to express uh, banking, credit systems, liabilities, and Bitcoin is a collateral that facilitates the printing of liabilities, period. This chart is quite constructive, breakout, retest, higher high, and it's a very rapid higher high, so it's a rapid repricing to the upside. Um, it's nice for things to take their time, but they could diverge significantly. This is pretty much the first cycle of inspection. Frax is a relatively new asset. Uh, late 2021, early 2022. That's literally all the history there is to it. And I mean, I get a little bit of goosebumps looking at this chart from a time weighted average price perspective. Breakout retest higher high within 3 months. That's quite interesting. That means all of this price action below was a significant divergence to the downside and wasn't expressive or representative of the fundamentals in play. Especially with Fractal coming online, that's quite interesting. I think Solve continues to outperform. Just to digress a little bit on some hot stuff that people like, I think the mean regressions will be on the lower time frames. Same with Scientia, they have a lot of hype, and that attracts a certain type of investor, and your mean regressions will be on shorter time frames. As long as the market continues to perform, these assets will continue to outperform. Notice 200 SMA mean regression on the 4 hour, period. Simple as that. 50 SMA mean regression on the daily. I mean, literally, that's like looking at Bitcoin on the 6 month chart. That's what kind of outperformance is occurring for the asset. I don't see any reason, considering the locking mechanic and that kind of activity that's inherent to the Cosmos ecosystem, why we would see an invalidation of this thus far. This directionality looks very interesting. I wish I was a little bit more aggressive with my obfuscation of internet presence, VPN activity, and I would have claimed that to airdrop, but it is what it is, and I certainly am not going to chase it to the upside. That's okay. You really, folks, really have to learn how to let things go. You could watch an asset do very well, don't chase it. Phantom looks like it's in a position to outperform as well. Zoom out to the monthly. And notice the breakout from the time weighted average price and the retest held the 10 SMA as support, wicked right through the time weighted average price. Not much on the 3 month to inspect. Curve obviously took a shellacking. It has not broken the time weighted average price. It remains at a discount. This is not necessarily underperformance. Underperformance, one, is relative. Two, it's not indicative of where things are going to land when significant liquidity floods the market. Liquidity will flood the market. That is basically baked in the cake. I mean, literally, zoom out on liquidity conditions, and we were at $186 billion worth of liquidity back in peak in 2022. I don't know, 188 in April of 2022. And we're finally starting to bottom. So this is literally the start of the activity. And when I say the start, this type of activity takes months to play out. You get a 10% increase in on-chain liquidity. The first and foremost thing that does is it draws in more liquidity until you get significant divergence from the mean and you get your bubble and the bubble bursts. So this is the start of that process, merely the start of that process. So what is interesting is this type of inspection allows me to avoid the noise. And for what it's worth, I do avoid Optimism, Avalanche, Polygon. It's just, it's like third and fourth level of liquidity. And that means there's less opportunity. 1.3 billion on Polygon. Strong narratives, very powerful technology. But I think activity on Solana and Arbitrum are going to outperform Polygon, Avalanche, Optimism, Phantom, Bases, a rounding error, even Cosmos hubs, because I have my way of allocating capital and I follow the money. So Cosmos hubs barely have any liquidity. You have TVL, but TVL means nothing without liquidity, so you don't have significant volume or ways to capture volume as revenue. So Kava and Noble, I wish there was a Noble presentation, but DeFi Llama does not have Noble. But it's $100 million as compared to Arbitrum at $2 billion and Solana more or less at $2 billion. Binance Smart Chain, I basically ignore. Tron is not something that really the West partakes in. It's more like a settlement layer in the East. And Ethereum mainnet has $70 billion worth of liquidity. The vast majority of activity will occur on Ethereum mainnet. Prices are a red herring. They are not as inhibitory as people think. There will be no inhibition to engage on Ethereum mainnet. Arbitrum at 2 bill had me. I have my exposure to Solana and through Hero Network, and I don't like to overexpose, especially to the smaller market cap chains. But I did not have the exposure I wanted to Arbitrum, so I opted for Parify. I am a very rare allocator. My allocations don't mean much other than maybe, hope. I want exposure, so I opted for Parify exposure. Up and coming perpetual swap protocol. Good old on-chain perps from an Arbitrum perspective. So, okay, GMX hometown territory. We'll see what they can do. The LBP is still in play for another 1 minute and 50 seconds. I surely look forward to this ending and seeing what plays out in the next couple of days as they start to deploy liquidity into LPs. There's no way to know at all what will happen. uh, let's go back to the charts. Let's look at some comments. See what you guys are up to today. Critical Mass is in the house. Diego, hi Cap. You always speak about left or right curve. Can you explain this concept? Left is basically part of the population that doesn't really use critical thinking. Followers, they love memes, and it's just they don't really have a regimen, a methodology, and that you could throw a lot of other adjectives to describe that part of the population. Right curve is excessively critical. That's mostly the way I engage with the market. Um, the average person is mid curve, but to outperform, you want to find yourself in the left curve and the right curve. You either want to just be incredibly critical, incredibly methodical, and stick to a plan and execute religiously, That's right curve. Left curve is just, oh, that shit is hot. Buy it. So those are the parts of the curve that outperform the most. I would argue that left curve might outperform the most, but they don't retain the capital. So right curve might outperform less than left curve, but they tend to retain the capital. That's just very broad description of where those two parts of the curve, what they represent for the capacity of those parts of the population. Tab C, hello, rational enjoyers. I think this is the most rational market there is, because that surely doesn't exist with equities and the shit that it does. I mean, literally, you got the S&P, which is like the S&P 7. I mean, it's ridiculous at this point. The market, Russell 2000, or equal weight S&P looks like it hasn't even broken out yet, but it's not representative of the state of the market. The state of the market is all that macroeconomic talk of total credit card debt that people took on, and savings rate is basically zero, and demographics have collapsed in the United States with a 0% uh, increase in birth rate. It's just it's not as rosy as people think, but that doesn't mean that if the dollar goes down, asset prices won't go up. So that's why we try and peer through the bullshit of all the headlines of how shitty things look. And sure, they do look shitty. The real economy looks like shit. Companies are starting to lay off, but as they lay off, that boosts the stock price because now they just drop their capex requirements for human resources and AI, and you don't need the same amount of people to do the same amount of work. So the real economy is a very complex thing, and that's why mainstream media and politics is so complicated to peer through the bullshit with regard to investing. Because the real economy looks like shit, politics looks like shit, demographics looks like shit, but the financial economy doesn't look like shit. It's just going to bolster asset prices, at least nominally, and certain asset classes will outperform nominally, but considering that outperformance, they will outperform a great deal in real terms, inflation adjusted, so on and so forth. Crypto 2, good morning, much pleasure. Sam's in the house, pleasure. Hello, been a while since I caught a live stream. Arthur Hayes says 3035 BTC, class Federal Reserve not renewing the top toxic HTM funnel. We're talking about March, April, May. You know, my inspection is primarily what would it take to print lower lows? I just don't see lower lows in the cards. But that scares the pants off a lot of people. I don't see lower lows on any of the stuff that we follow, but I don't see it from clearly meme coins and bullshit. That's another clean sweep, flash fire. It'll actually absolutely destroy them and decimate them. But assets that have systemic meaning will get bought because there's systemic meaning. They offer a product and service that is useful, that is in demand. People want to own these types of businesses. So I don't see lower lows. So you could easily have these very high time frame mean regressions. 33 would be a 3-month time weighted average price mean regression. Go out to a 6-month, you can get significant mean regressions. We're significantly deviated from the average on the 6-month time weighted average price. Albeit in 2022, it was a mean regression to the 6-month time weighted average price. How about that shit? It's always a mean regression somewhere. And this really illustrates what kind of discount can be available for very short periods of time. 27. What did Arthur say? Where are you? 30, 35. Okay, well, literally that would be a 3-month time weighted average price mean regression. Okay, that seems quite reasonable. And we'll see. There's absolutely nothing unreasonable about him picking those targets. There's nothing unreasonable about him thinking commercial real estate is an absolute shit show. The banks look like shit, especially the smaller banks, the regional banks. And we'll see what the regulators and the federal government have in store for, large GSIBs, the systemically important banks, absorbing failed regional banks that have destroyed HTM portfolios and commercial real estate on their balance sheet. And that's the real economy. The real economy is an absolute catastrophe. But look what happened in March of 2023. Banks failed. Depositors would have lost money. Anything outside the scope of FDIC limits, they would have lost a lot of money. But then Treasury stepped in and they backstopped the whole thing. And the market went up. So literally, banks failed in September of 2019, and they had to figure shit out and then they really rolled over in March of 2020. That's another story. That's the great aberration. But they intervene and backstop liquidity. Canceling deflation is not, you know, net inflationary, but you have to inflate to stop deflation. If you're talking in terms of interventionism. So from a financial market perspective that's very sensitive to systemic liquidity, when you're thinking from what Arthur's talking about with the HTM portfolios and the BTFP program becoming a shit show, if they intervene, that's going to be bullish for risk assets because you have to inflate to cancel out the deflation. So it's a very contrarian perspective, and it's perverted to say the least, but it's certainly real. Um, I don't see it hurting liquidity too much. The market is much more dependent on what the hell China's doing, and they are inflating everywhere because they're in a deflationary collapse. Their real estate sector collapsed, and that was like 20 something percent of their entire economy. And their stock market's at like 2007 lows and just heading straight down, and they're banning short selling. It's very interesting to understand what the hell's going on around the world, to understand what's going on in markets. And China is basically in a 2008 situation where real estate is collapsing. Do folks know that? And they are certainly countering it to a greater extent than anything we did in 2008 in the United States. They are supporting the markets. Anyone else here wish Mitch could have just bought a normal house? That whole house is just a very silly story. That is certainly not what occurred. Um, his on-chain debt is for on-chain activities. Clearly, I have no capacity to speak for him, but I could speak as what I would do if I was in his situation. And if I had 9 figures worth of available liquidity and a business that could benefit from on-chain activity, stablecoin arbitrage, providing liquidity, financing, um, uh, partnered protocols, and bootstrapping their protocols by providing liquidity and attracting investment and attracting liquidity. Everything he's doing makes perfect sense to me. And what he did with OTC at 40 cents, sure, that makes sense. He was put into a difficult situation because of an outside event. But under normal conditions, he has a shitload of collateral that's basically a liquid that can't be sold. Tap the equity in that collateral, produce working capital, and execute operations to build out the ecosystem, which is literally what he does. So, frankly, I don't see the story as other people see it. I see it more from an entrepreneur's perspective. And for someone that's been in the markets for a decade, 2013, 14, or whenever the hell he got into the markets, I'm sure he has countless 7, 8, 9 figures sitting around in other denominations. I think that mansion story is quite humorous and dis- disappointing, but I'm not surprised and how stupid the markets could be and how susceptible the markets are to hearing stories that really don't make much sense. George, good morning. Critical mass. I'm in the three tokens out of the thousands that don't move. Can you guess? XRP, Link. Uh, I don't know what the third is. CryptoTube, can you give us an Aura update? Aura has been a price action catastrophe. I don't. Let's pull up the chart. It's surely at a discount. I'm not too fond of the price action. Can it be a triple bottom? One would hope. It just doesn't have the network. You could diversify a little bit. Curve Federation is obviously the strongest and drives the vast majority of on-chain activity via its incentive systems, brand reputation, so on and so forth. And Aura is the closest thing there is. How many chains are they on at this point? And they are constantly receiving inflow. In fact, dollar emission per dollar of vote rental is greater than one. It's not the case for, I think it's less if you look at Air Force, I think it's less for Convex. Convex is not, it's at 0.80 something. You go to overview, you go over to Vodium, and if it loads, yeah, Hidden Hands at a buck 10, but if you go over to Vodium, it's at 70 cents. And this is why Aura gets so much capital directed towards vote rentals. It pays a lot. I mean, literally for 2022, 23, and into 24, it's 60, 70, 80%. That's a massive APR. So that's interesting. No one knows where everything's going to land, but the fact that it's the second system to really do something interesting with regard to liquidity financing and their 80/20 pools for VE tokens that Bunny and others and many others, their VE incentive program to encourage uh, governance tokens from protocols to be directed towards 80/20 balancer pools. It's very interesting. And the price action is certainly disappointing. It's not for me to say. I'm not deploying much capital. I deploy very little capital, and I'm already exposed. I already have my exposure. So the thought in my mind is, do I retain exposure? Do I exit? Why the hell would I exit something that's paying 60, 70, 80% at these types of valuations when in the bull market, anything goes up, everything goes up. So wait for this to run. And if I want to exit, I exit then. This is not a time for me to exit. This is the time to keep collecting revenue. And I could contemplate exit when the market looks like it's frothy. Frothy market is when you contemplate exit, not at the bottoms. Can you give us an Aura update? Hope that helped. I too failed to claim my TIA air job. Yeah, disappointed about that one. That would have been an 800% return. And since TIA was dropped to, what was it, either Cosmos or Osmo stake, I would have been a large one. Probably would have been six figures. So I got a little frustrated about that one. Since then, I've been a little bit more diligent with my obfuscation techniques to have access to the benefits of being exposed to the Cosmos ecosystem. But I don't think much is going to replicate the performance that TIA has achieved. There's a lot of shit out there that's doing what TIA is doing. So TIA has a lot of flair and attention. The whole Cosmos ecosystem has a lot of attention. If someone told me in 24 we were going to experience this stuff with the Cosmos ecosystem back in like 2019 and 2020, it was a ghost town. There was no activity back in 2021, 22. Cosmos hubs were completely off the radar. So I don't really mind my lack of exposure to TIA. I have full exposure to the Cosmos ecosystem, and I'm quite excited and very satisfied that what I saw all those years ago was actually the case. IBC is a big deal. Seamless cross-chain flows are a big deal. You don't have the bridge instability in the Cosmos ecosystem that you have noticed probably uh, uh, with all the billions of bridge issues across the Ethereum landscape and other chains, other L1s, alt L1s. IBC has been basically flawless. So that's the Cosmos narrative. It's what I always saw, and that is proving to be the case more and more nowadays. Raul, hello. Uh, Lanks, LBP was a shit show. Hope Parify works out. Yeah, that's where I'm at. I'm very resistant to deploying capital, and I'm sure Parify is over at this point. Yep. And simple as that. It's a punt. That's all you could do. Um, Hello, Captain. If Uni were enable the fee switch, under which conditions would you get some? Zero. I think Uniswap is one of the most important protocols in the entire crypto space. V4 seems very exciting. Um, well, not zero. Listen, pay me. Show me 20% APR, but that'd be crazy because 20% APR on Uni's price point is not going to happen. So I don't see it as being feasible nor probably reasonable. I think allocators to Uni have distorted its price as being representative of what it offers. It's sure it can be reflective of the contribution that Uni has to the ecosystem, but that doesn't mean much for me given the way I allocate capital and what I'm looking for. Uniswap's a big deal. It's not going anywhere. So in that regard, maybe Bunny is able to fulfill what I'm looking for as an investor while offering indirect exposure to the Uniswap ecosystem. So that's interesting. And the Bunny devs have talked quite extensively about using V4 and hooks to build, a next generation AMM using Uniswap technology. And those are all, it's not hyperbole, but those are all forward-looking statements. And we'll see. I have my exposure. I don't intend to take any more exposure. So if my exposure does something reasonable in the next 4 to 8 years, I'll sure as hell be quite satisfied. GBTC, FTX, Mt. Gox, Silk Road all decided to start liquidating. Sure, and that's certainly accounts for Bitcoin price action. 47, 48,000 down to 39 and change, back up to 42. This is all normal volatility for crypto markets. And that makes me need to bring up the picture. It's all normal activity for the crypto market. So everyone's running around frantic that there's a storm, not properly distinguishing between the real economy and the financial economy. And I sit here in the chair that's in the picture, which is my office chair that I'm sitting in, and I'm like, all right, this is the crypto markets. It doesn't really doesn't phase the captain. Pendle is real cool protocol. Yes, it is. I can guess it doesn't fit into XYZ, but the tech is amazing and introduces highly sophisticated trading strategies. Sure, dude. There's 1,000 different ways. Not 1,000. That's hyperbole. Just a random number. But you can't own everything, so you have to make your choices. So in the end, my define your guiding principles. My guiding principles is a dividend investor. I will if I had a choice between a $10 million lump sum or $1 million a year for unknown years, I would take the mill a year because then I can bank on things. I have a certain amount of capital for a certain period of time, and that allows me to process things a certain way. It's not a mill a year, but it'd be broken down weekly. So if I have a certain amount of capital on a weekly basis, I know how I can live within my means. If I have a lump sum, now I have to pace things out. I have to plan on longer time frames, and I don't want to do that. So I very much appreciate the concept of having a weekly revenue stream. I find that to be quite extraordinary. Changes the whole living equation. Pendle is my Ethereum perp narrative. Okay, that's cool. It surely has lots of backing, and a lot of things have a place. Listen, the total amount of stablecoins do what everyone thinks they're going to do and run 10x, and you got $1 trillion worth of on-chain liquidity. It doesn't matter what you own; it's all going to run multiples. And I don't know your position regarding ETF. How close are they conceptually of an LP token like a Curve Tricrypto one? ETF, ETF, uh, as in the Bitcoin ETFs? They're not. They're not all. I might be missing something in reading that. Snow Captain, what do you think in investing in stocks in the traditional market, and what about dividend investment strategy? The dividends are not available in equity markets um, that can help anyone achieve what they're looking to achieve anymore. It just doesn't exist. Of the dividend stocks I find, I mean, what are you going to get? 5, 6, 7, 8% on the money? You might as well get 4 or 5% and lock in 20 years on a government security. And you're going to take 8% for the risk of what? Not just the volatility of the stock price, but the risk of the board diluting you, raising capital, issuing more shares, or just the subjectivity of the board and they make mistakes and they don't do the best they can for the business and the business doesn't perform well. So the biggest risk with equities is humans. So the biggest and most refreshing thing of crypto markets is the absence of humans. An optimally built protocol is not an equation that has human risk unless it's an immature protocol. But a mature protocol that has consumption and has use without human action or intervention, that means it has a moat. And that protocol will see a market that has a $500 billion, $1 trillion in 2030. The protocol will continue to exist and survive because it doesn't require any human activity. It doesn't require a board to make choices, to raise capital and all that bullshit and OPEX, CAPEX, human resources. There's none of that. So all of this will continue to exist in 2030 and the amount of capital in these markets will expand enormously. Crypto markets are the only place to deploy capital, in my opinion. I have equities exposure, but I basically have shit expectations for them, which is presents me quite an interesting thought, basically on a daily basis. Why do I have them? I don't know. Maybe I should liquidate all that shit. I know what I did with my Roth IRA. It all went to physical gold and in the brokerage's storage, spot gold, and to Bitcoin ETF. What we do with the volatility? Check back in 4 years. I didn't really think too much about it. Didn't need to. Um, so that's the equities markets. Is just, I mean, where's the growth going to come from? The real economy looks like shit. So what I want to own in equities markets is fintech to a degree, but the fintech, why own an equity when the fintech that has the best potential to outperform is in these markets? You're talking about like on-chain APIs and what what was he talking about this morning? I mean, it's Aleph. That's a heck of let me find it for you guys. So this thing I has significant done very well, but what was he talking? I don't have it up, but I can find it. Let me find it. It's right here. This thing. I mean, this is crazy tech, but think about this from an equity standpoint. It's literally APIs. I do software development for Android for mobile, and when I see this, I'm like, okay, let's write some damn APIs and pick a chain, and this is crazy. This is crazy, and this has nothing to do with a traditional corporation that would be available on the stock market. So these kinds of opportunities don't exist in equities markets. So my general sentiment is just underperformance in equities markets, and it's just a different account. It'll underperform, but it's a means of diversifying and having meat space exposure. So when I think of them, for myself, I'm disappointed in what I own in equities, but you can't crowd everything into one particular thing. You do need to diversify a little bit, I guess. Maybe it's a mistake. It's probably a mistake. It's a mistake with regard to outperforming the most. But then again, my contrarian mind says I don't want to outperform the most. I want to outperform and do well as long as I stay within my right curve lane, that everything makes a great deal of sense, has logic and reason, and has a strong narrative. So I don't. I like that thought a lot. Everyone wants to turn $1,000 into $10 million. How about turn $1,000 into 100 grand over 4 years, and turn the 100 grand into 2 mil in another 4 years? That's reasonable in crypto market terms. So that seems interesting to be a contrarian in that regard. Um, Take on inflation, H2. Think about Yemen shipping issues kicking in. Yeah, but the real economy is screwed and consumers are screwed and savings rate is zero and credit cards are tapped out. I would say inflation is probably going to come down, even considering supply side disruptions. It would be interesting to look at Fred charts for consumer credit and that roll over. It doesn't matter if there's supply side disruption, if demand is literally evaporating. So that could be very interesting. I expect inflation to come down. Uh, uh, we could get into very extreme scenarios where there's more conflict, and clearly the Red Sea has a potential to escalate. But I'm no geopolitical analyst, and all that shit introduces volatility. But overall, the directionality of this debt-based system is deflation. And there can't be deflation because otherwise you can't prop up the debt-based system. And they know this. And they know that we know this. And we know that they know that we know this. So what does that mean? Up only over time with deflationary shocks all over the place. Can you show us your TWAP setting? Having trouble making it look the same as yours? There's no TWAP settings. It's just the choice. TWAP trend by Jagged Soft is the one I like. And I just turn off the area chart underneath. I turn off the background. So it comes by default with the background. I turn off the background. Jagged Soft is the one I like. Hope that helps. Sergio's in the house. Much a pleasure. Which AI do I use? I use uh, what do I use? I never can remember its name. It's just the weirdest thing. I use it all the time, but I can never. The big one. Oh my God. Midjourney. Oh my God. Why can't I remember? It's really weird once you get to a certain age that words are like on the tip of your tongue and you use them on a daily basis, but you can't remember them at times. It's really weird. Just Midjourney. Gazika, by ETF, I meant aggregated stock ones, S&P 500, NASDAQ, and so on. Let's go back to your question. And I don't know your position regarding ETF. How closely are they conceptually to an LP token? They're not even remotely comparable. ETFs are just a bunch of schmucks in suits sitting in an office looking at data and picking and choosing a bunch of shit that goes into a basket of shit. They're not even remotely comparable to LPs, my friend. Um, I don't even understand. Like S&P is literally crafted heavily weighted towards the Magnificent Seven because the Magnificent Seven has outperformed significantly. So the S&P 500 is not representative of 500 stocks. It's heavily weighted towards seven. So I don't even know what it represents at this point. All they're doing is just giving you this pinhole perspective on the state of the system, and the state of the system from a real economy perspective is devastated. It's devastating. It's horrible out there. It's just impoverishment and this whole migration shit show and it's a fucking disaster out there. But they can't let the system deflate. Otherwise, then you have Mad Max, Fury Road, Beyond Thunderdome. It gets post-apocalyptic real quick if the system starts to deflate and the dollar starts to get destroyed. And when I say dollar destroyed, the vast majority of dollars are not dollars, they're liabilities. So the dollar liabilities start to evaporate, the whole system unravels really quickly. Truly appreciate your response. Thank you, Captain. You're welcome, Snoke. You're welcome. All right, it's Friday, January 26th. Lots of market volatility. Ethereum's back up to 22.6. That's pretty cool. Bitcoin's at 41.7. These numbers look great. Let Bitcoin fall to 29 to 32. Numbers look great. And clearly all of this is from a perspective of being in markets for years. So there is a whole learning curve and experience for folks to deal with taking positions. It's a very different perspective when you're in markets versus trying to get into markets. It's literally the same thing as if you've never gone to a school and it's your first day at school, or if you've never gone to a party and it's a first time going to a party. I don't know. That is a very intimidating thing to get into it, to be in it. So once you're in it, then I offer that perspective of how I navigate a market from the perspective of being in it. That the volatility is what it is. It's not really intimidating. This is all normal behavior as manifested by the insanity of the world. Just because the real economy looks like shit doesn't mean the financial economy isn't going to express itself well in the appreciation of the assets that we look at that deal in credit, foreign exchange, and derivatives. That's really all there is in these markets, other than shit like this, which is exciting to see. But this is going up against meat space. These are APIs. Change starts at the margins, but these types of margins take a decade to play out to disrupt incumbent meat space companies. So with this it's finally happening, and Cartesi with uh, doing what they're doing on Rollups and with regard to offering Linux VM functionality, and and it's starting, and this gives me an insight on where things are heading in the next 10 years, and that's cool. And that it's validation of the way I look at markets as being basically fintech investments, but also not just like standard disruptive fintech investments. Like this is a disruptive fintech investment. But what I'm most interested in isn't disruptive, is fintech that has never been accessible as an investment before. You can never invest in Bank of America giving them liquidity, be a liquidity provider for a bank for foreign exchange. You can never give money to a you give money to a bank for them to extend credit. They take the profits. And literally that's called a bank deposit. Oh my God. So in these markets, you could go into Aave, deposit your capital, and you get the interest. Holy shit. Literally just Aave, boring old Aave, disrupts the shit out of the way we've historically engaged with banking. Oh my God. So that's what's so refreshing about even the stuff that people overlook. You never had access to anything like this. Ever. Ever. Gazika, you have a good one. James, hey, hey, you see Grail going to a curve model with voting gauges, Grail Wars? Yeah, it could be interesting. All in all, uh, I was tempted for Grail exposure, but that's okay. I opted not for it. Arbitrum has plenty of curve activity. CRV USD will be doing very well over there, and uh, and the Llama Lend is very exciting, and that's coming really soon. And I'm pretty sure they're going to focus on Arbitrum. Um, Arbitrum, that's it. A lot of folks want to engage in the other chains to own gas tokens and all this shit that's going on social media. Gas token this, gas token that. You need to understand what you're buying. That's the most important bright curve thing to do. Yet most people are literally buying gas tokens for chains. Like all that Cosmos stuff, Tia, it's literally a gas token. Oh my God. So follow the liquidity. And that tells me where the businesses that I'm interested in will do the best. And that means I look at Arbitrum and Solana. That's it. And mainnet, obviously mainnet. And even better is a protocol that is cross-chain, that is chain agnostic. And isn't that where we're heading? So folks are like, oh, this chain is the best because there's the cheap transaction fees. How about a protocol that operates on all chains? Cheap transaction fees, expensive transaction fees, because there's different reasons why you want expensive transaction fees versus cheap transaction fees. It's not just cheaper is better. Different finality, different transactions per second, different security. These are all considerations. So at some point, chains will be aggregated, and you'll be able to pick the characteristics of where you want your transactions stored for achieving finality. So stop thinking in terms of better and worse. That's a very important thing to do. So that's where I look to the most is businesses that are operating on many chains, all chains. In fact, it should be generic such that it could operate on all chains. That's the most interesting to me. DeFi Futurist, Cap, compare Arbitrum and Frax. Which one has more percent up? ARB is a token. It's not a gas token. It's literally a governance token. Uh, it's going to get a whole lot of froth because folks are like, ooh, Arbitrum, ooh, buy Arbitrum token. It's literally a governance token. All right, great. From a technical perspective, you could play it, but my tendency to right curve the shit out of everything says it's a stupid governance token. Great. If you're a large actor, you got 100 mil in the bank, and you want to gain a little bit of control over the Arbitrum Foundation, and great. So you could afford to own governance rights. It's not paying an interest rate. I don't want to LP it. So I can't help with that one, DeFi Futurist, because literally a stupid governance token that doesn't pay you anything can do very well compared to other things. Price appreciation is literally not what I'm looking for, which is interesting. It's the contrarian perspective that I offer. I look for the story. I look for what makes most sense from a business perspective. I follow the money. And whatever price appreciation comes, it comes with a story that I could describe in great detail of why these businesses are successful, why they're meaningful, why owning them means my choices are different. And however they do, they do. I want to be right more than I want to make money. That means more to me. And that'd be my accomplishment that I saw things that other people didn't see. I saw businesses that were starting out as startups, micro caps. And in 10, 15, 20 years, they're not so micro anymore. And then that's the way I will continue to engage with markets. Dinner table investing, because in 20 years I'll be able to tell one hell of a story that I bought this shit when it was peanuts. And not about price appreciation, but I bought a business. I owned a business in the first the first seconds of its life that no one else saw. So gas tokens are not good. Solana is also a gas token. Yes, that's correct. Solana is a gas token. That's all it is. So gas tokens are fine. Solana will probably outperform Ethereum. Okay, so I don't technicals. You look at the technical analysis to see where the flows are. You literally, when you're talking about that kind of price action, you're talking about the hot bowl of money. So Solana has clearly outperformed the shit out of Ethereum. If you go into Sol ETH, I mean, look at that. Solana is up a tremendous amount versus Ethereum in the last 6 months. Solana is up 250% against Ethereum in the last 6 months. So these spreads are a way to inspect which one is outperforming, where's the hot ball of money. So gas tokens are fine from a trading perspective, but that's literally the last thing I do. Which will do better, I just have no possible way to know. Here, look, ArbFrax, Arbitrum USD times uh, divided by Frax USD. So Arbitrum has significantly outperformed Frax in the last couple of months. In the last 2 months, price range, Arbitrum has outperformed Frax by 76%. So, by literally, this chart says Arbitrum has done better than Frax to the tune of 76% in the last 2 months. So that's what you're looking for is a spread to find what is outperforming the most. And you could do spreads like this in TradingView to get a sense of what is performing the most. But that shit drives me nuts. I'm quite content with my FXS USD with a breakout retest higher high, a flipping of resistance into support, and the narrative and the story of what Fractal is and the capacity to print liabilities. It's extraordinary and tantalizing. And that's what I like to think about and talk about the most, rather than just price action, which will drive you nuts. I want to make money, Captain. So you wanted to learn the technical analysis. You want to find the breakouts and you want to find low caps. Like this was a hell of a play. I mean, in the last 2 days, it's up 300%. Mm-hmm. Price range. January 24th, 200%. Literally, it's at 200%. All right, so you turned $10,000 into $20,000 in 2 days, but that also implies you sold. You're not an investor, you're a trader. So 2 mil market cap, it'd be a fair amount of slippage at 100K buy. I mean, 2 mil liquidity, 62 mil market cap. It could have easily turned 10 grand to 20 grand in 2 days. All right. So now you have to not only know price action, you have to know stories of what to look at. So, anywho, Aleph has done well. Cortesi has done well. Bunch of frame. Oh, it looks very nice. Look at that. Breakout, retest, and now you want to see a higher high, 30 cents. This is actually very interesting because it's only up 100, 200% from the lows. 10 cents through the lows, and it's 230% from the lows. Structurally, this looks quite interesting. Interesting tech, Linux VM on pretty much roll-ups. So that's cool. Take it for what it's worth. I have no exposure to it, nor Aleph. Parafy, I took a little position in their LBP. That's about it. Arbitrum exposure. That's my general sentiment of interest. Arbitrum, Solana, and Ethereum are where the liquidity should flow this cycle. Maybe we'll see a new chain come online. Well, what's the Solana of last cycle? 2021, 2022. That had that. And that's probably Optimism Networks, the chain of chains, as I historically call it. not optimism, Cosmos Networks. Ooh, optimism is there, but it's got 600 mil, so it's not the fastest horse. It has not garnered the most attention. Avalanche has a bill, and that's a big deal. They're trailing. They're trailing Arbitrum and Solana. There's big tech. Arbitrum's, the L2s, Arbitrum, Optimism, big tech. Polygon, Avalanche, big tech. Phantom, big tech. Big tech. The Cosmos hubs, big tech, big tech. It's very exciting. This is more exciting than anything I can think of in equities markets. All right, let's wrap it up for today. I wish you all a good one. Friday, January 26, 12:45 p.m. Uh, Dan came in last minute. Hello. DeFi Futurist, when you are right, you make money. Yes. And for me, I don't want to make as much money as possible, but I want to be right with a story. And that, to me, is the most satisfying. I wish you all a good one. Tell everyone to subscribe. 26 people made it to the end of the stream. 7 likes. Smack that thumbs up button. I appreciate each and every one of you. In the description is a link to the most rational community in the entire crypto space. Y'all have a good weekend now, and I will catch you next week. Peace.